All right, boys. We're gonna go over kind of like the updated 2026 trading strategy that I have been using. Whole reason being I wanted to make this video right now is because of the month we're having so far in June. I think I've had one red day or something so far, and the win rate's at like 90 something percent. Regardless, there is yes a lot of still a lot of time, left in the month, but um, what a way to start it though with the strategy that I've been using. Normally, it's got around a 75 to 90%, I would say, a win rate of that, because some months are a lot better than others. Some months are some months are good. It always depends, but yeah, I kind of just wanted to go over pretty much the ideal stuff you need in order to use a strategy, or at least to start back testing it and then using it in the live market for weeks to come. But yeah, and another thing, again, I'm always going to mention my Discord community. I run a mentorship. I help students go from zero to nothing. Uh, they could have traded for 2 years plus, haven't seen any results. They come work with me for a month at least, and then they really start seeing results and they start taking off. um, all types of students I've had in the past. But give it a shot. I'll leave the link down below for you guys if you want to join up. And yeah, I'll leave you with that. Um, so yeah, just to get started, let's see. So first thing I want to go over your bias and draw liquidity for the morning. Probably the most important things when it comes down to trading in the morning. I definitely like to look at which way we're trending in the market. You have to have an edge in order to succeed in the market. That's what I kind of firmly believe in. So first thing you would do, right? I like the daily. I like the 4 hour, the 1 hour, the 15 minute, even the 5 minutes sometimes. So you look through those. You look through those time frames, right? And then you have to realize if are we disrespecting gaps? Are we respecting gaps? And you have to align them. So if we're going to be bullish for the morning, I'd want us to be respecting bullish gaps and disrespecting and running through bearish gaps, right? The opposite goes for a bearish morning, right? I want to respect bearish, disrespect bullish. Um, and just a quick like little example, I guess, of this. We'll go to like the 15-minute time frame. Um, so obviously you see this leg, this big leg here, right away. This fair value gap gets inversed. This whole leg pretty much gets inversed, right? Um, that's telling me that we are bullish, right? And we do have small retracements, yes, but overall we are very, what? Bullish. Hopefully that makes sense. Yeah, so next thing we will always identify the swing highs or lows that we're kind of drawing towards. And, once you've kind of aligned, oh, do we look bullish? Do we look bearish? Then you really want to identify those swing highs and lows, those session highs, session lows, all that stuff. And that'll kind of just bring us right on into the next step, which is the key level identification. This goes right along with the bias for the morning, right? Where do I think price is going to go? Price loves going to unmitigated fair value gaps, so such as the 4 hour, the daily gaps, the 1 hour gaps, 15-minute gaps. I mean, for Christ's sake, like the whole strategy I'm using is based around trading towards unmitigated gaps. Um, Price loves doing that. Price and time will always send the market towards unmitigated gaps. Then we have session highs and lows. So Asia highs, Asia lows, London highs, London lows, right? And then we have data wicks and also the 930 high and low candle, right? I don't know if we have a good example today, but kind of we do. So this was the 930 opening candle right here. Unfortunately, it got swept, but if we would have left this wick and just dumped, once I would have hopped in this trade, that 930 wick would have been my break-even point most likely. So just for kind of like an example, if that makes sense. Next, we have something that I've kind of recently added. CISDs, typically on the 5 to the 4 hour time frame. The higher you go in time frame, the stronger I believe the stronger the CISD will be. So this morning, great example of it, which I can show you real quick. We had this 1 hour change in the state right here, right? Boom, so I marked that right before the market opens, right? It's my pre-market bias. And one thing we can see, before I took the trade, we were kind of hovering over this CISD, right? Like we made our move up, we closed above, we came back, respecting that CISD. And honestly, overall, I got my trade from the CISD, right? Came back down, still respecting it, and boom, what do? We went up. And what does that look like on the 1 hour time frame? This was the candle I took my trade in. What did? We wicked out of it. And then the candle before that, we wicked out of it too. I believe CISD is a very strong price point, places for price to go, I believe. All right. So once you identify your key levels, right, you got your bias for the morning, you got your DLO for the session, all that good stuff. First strategy I'm using is it's called the MEC model, right? It's pretty much just a reversal strategy. But the thing is about this, you have to see price go into that, high probable area of reversal, right? So that key level, you have to see price go into the key level before reversing. So like I wrote here, we're hands off until price sweeps or taps into one of those levels that we were talking about above. From there, we're aligning our bias with the reversal that's about to happen, and we wait for the highest time frame inverse fair value gap within that most recent manipulation leg. So what that would kind of look like, bearish example right here. We see price, we're hands off, we're generating some liquidity, whatever the case may be. Come up, tap the unmitigated 4 hour gap. Out of this, we're just looking for the highest time frame inverse in this most recent manipulation leg. Say we get the close right here, bang, we enter that, stop loss at the high, and we're targeting either like a 5-minute unmitigated gap, a 15-minute gap, or all of the low resistant liquidity that was put in. And same thing kind of goes right here, right? This would be like a 1 hour fair value gap. Tap into it, highest time frame, we get the inverse, boom, targeting London high, for example, right? Price loves going to those significant key levels. And that's pretty much it, guys, for that model. And this right here, I'll show you the trade from this morning. I made a recap on that today, so go ahead and watch that for sure. This was a MEC model. It was just the key level that we hit. We put it in an SMT, which are technically key levels, I guess, if you want to call them, right? ES ended up taking that low while NQ didn't. Okay, got the highest time frame inverse, which was a 2-minute because there was no 3-minute in the leg. Got the close here. We enter here, targeting a 30-minute, or you could have held to London high, but in this case, I just went for my little 1 to 1.5. So got the inverse, targeted that, targeting all the low resistant liquidity, piled up, pulled up right here, and boom, TP within 2 minutes. Easy as that, right? I hope you guys have made it this far into the video. It's definitely a little bit longer of a video than what I normally do. But the last little thing I wanted to talk about right here was our continuation strategy. Extremely high win rate. The probability of these trades, especially when they're set up perfectly, are like second to none. Like they're very good trades. So what that'll kind of look like for you is, once you have a drawn liquidity already, say for example right here, we'll go data lows, right? And we see price trending towards that drawn liquidity that we had, such as data lows, but we never got a reversal because we're just starting to trend. We're just waiting for, all we're waiting for is a retracement into a 5 or 15-minute gap, or 3-minute gap sometimes, but it has to be an unmitigated gap In this case, right here would be a 15 minute, right? Um, Once we tap into that 15-minute gap, again, all we're doing is waiting for that highest time frame inverse again out of that manipulation leg that brought us up towards the unmitigated gap. We get the inverse, boom, we enter, we're targeting the data lows or whatever other significant key level you would have marked out on the chart. And then same thing goes with bullish. It looks the exact same. And it says it in the name, continuation strategy. We're just waiting for that retracement and waiting for our entry trigger, which is the highest time frame inverse. And that's it. But other than that, guys, that's pretty much it, right? It's pretty simple, keeping it nice and simple always. Again, join the Discord. I promise you it will be worth it. There's so much value. I've transformed so many students. You can attest to the students that are already in there. You can ask them questions about it and all that stuff. So I highly advise you to give it a shot. But yeah, I will catch you guys in the next trade recap I post, hopefully tomorrow. And yeah, I will see you guys then. Peace out.